In a letter to Prime Minister Mark Carney, the Business Council of Canada says if the federal government intends on financing investment by incurring more debt, then it better have a plan to bring it down. We're going to bring in Theo Argitis, Senior Vice President of Policy at Business Council of Canada, for more on this. It's good to have you, sir. Thanks for taking the time.
It's great to be on. Thank you for having me.
So the Business Council of Canada is saying Canada is in an investment crisis. Let's start there. Can you explain why?
Well, I mean, businesses aren't investing enough in this country, and this is not a recent trend. I mean, this has been going on for a decade now. It's just that the recent geopolitics, the trade disputes, the trade wars we've been seeing this year has just exposed our economy to the fact that we're vulnerable to shocks because we haven't been investing in this economy. And the reason why we haven't been investing in this economy is because the investment environment hasn't been there. The government for almost a decade now hasn't been putting in place the conditions to really incent businesses to invest more in this economy. We're hearing a different message from the current Liberal government. This is a government that is telling us it is focused on investment. So, we're encouraged by that. We'll see what's in the budget, but we would definitely like to see more investment happen in the economy so we can become more resilient to the shocks that are going on in the world right now.
Yeah, the budget coming out November 4th, so it's still about a month away. But we do have some expected numbers out, right? The interim parliamentary budget officer said last week that the federal deficit could be at $68.5 billion this year, which is up from more than $51 billion last year. You say, the government better have a plan to kind of address debt. Do you think it does have a plan?
Well, we'll see. We think that having a credible plan that includes meaningful reductions in the deficit year over year from what look like are going to be very high levels over the next, well, certainly this year and perhaps next year as well. I mean, we think having a credible plan, and credible, I mean credible for markets, is important to keep to have a very positive investment environment. If people start questioning the credibility of the fiscal plan and Canada's ability to meet its interest payments, for example, then we will see an environment for investment that will deteriorate dramatically, and we can't afford that. So we do need a serious, credible fiscal plan, and we do need a plan that is laser focused on driving investment into this economy. And I would add both private and public. We're not opposed to efforts by the government to focus on investment, to focus on ports, to get infrastructure moving, to get east-west trade moving. So we're supportive of investment, but it has to be laser focused on investment. No gimmicks, no political games.
Okay. Obviously, it's not like an ideal situation right now for Canada economically, right? You've got those tariff challenges and a trade war going on with the U.S. Of course, NATO has upped its spending to 5%. Canada said it's going to meet that. So what do you think are the biggest challenges for the government right now when it comes to, spending, but also trying to keep things in check?
No, I think the number one priority is growth. And it's not just short-term growth. I mean, we are kind of in the middle of a downturn right now in the economy, but it's about long-term growth. It's about our potential growth, our speed limit, so to speak, as some economists put it. It's about getting growth moving again, getting growth back to where it should be, to be able to drive incomes higher, to be able to keep employment levels high. So that should be the focus. And that means for the budget, that means a budget that is laser focused on investment, because that's how you get long-term growth. And that even if there is a little bit of fiscal latitude in the short term, that we make sure that the plan is credible in the medium term and investors don't run away from Canada.
Okay, if the country was to keep taking on more debt, hypothetically, what are some of the real consequences that come with that?
Well, I mean, you'll see interest payments on that debt increase. You become vulnerable to interest rate movements, for example. So if global interest rates rise, our interest payments will increase. But just the fact that the stock of debt is rising will mean more of the revenue that the government collects goes towards paying off bondholders rather than doing the things that government should be doing, whether it's investing or having enough money to provide the social programs that we all love. So it's very important that we have a credible plan, because if we don't, then the trajectory is not a good trajectory.
For sure. And also the government's planning to split up operating and capital budgets, but your counsel is saying that's probably not a good idea. Why is that?
We don't think it's necessary. The government accounting already takes into account capital, and we're worried that that's going to kind of muddy the waters a little bit, and they will give incentive to the government to kind of classify everything as investment, because that's what's going to happen. They're all going to they're going to have give themselves license to borrow for invest, but politically we know that what happens is that everything then becomes classified as an investment. So we don't think it's a good idea, just because we think it's open to abuse.
Do you find, just in our last 30 seconds ago, very quickly, do you find that the government in the past has looked at some recommendations and actually taken them into mind when actually presenting a budget?
I mean, we share the same objectives, so, we want the economy to grow. And this is a new government. It's their first budget. I mean, they do have a mandate to produce a pro-growth budget, and as long as that budget is on investment, and so we'll see what's in the budget. I don't want to comment on anything specific, but I think it's important that they remain focused on the core things, which in this case is driving investment into the economy.
Okay, we'll see you in just over a month's time. Theo Argitis, really appreciate your time. Thanks so much for joining us.